Good afternoon, everyone. It's about 2:15 Pacific time on November 6th. Today is Monday. Hope everybody's having a good day. We had a very good start to the week, continuing to build on top of last week's momentum, 5 days in a row, and today's the sixth day in a row. All three indices moving up. NASDAQ up 0.3%, small gain, but still a gain. That's important. And it's actually breaking out, as you can see, out of this down channel or downward channel that has appeared over the last. This is the monthly chart. If you look at the weekly chart, it's still within the channel, but just looking to break out, as you can see on the top, and on the daily channel on the very high end, upper end of the channel. So this is a good sign. I think it is making good progress. Obviously, you would expect some kind of a move down. You don't usually tend to have so many days consistently up. It could go on for a few more days, but I highly doubt that. It might do a little bit of a move back here and hopefully move back up again, would be my expectation. The S&P 500 also up roughly about 7 points, about 0.1%, almost 0.2%, also moving slightly out of the channel, which is a good sign. And then the Dow Jones Industrial Average up about 34 points, 0.1%, and definitely out of the channel. So this is probably the strongest of the three, if you will, if you look at how nicely this has moved outside of the channel. Even on Friday, it did a good job, and now it's just building on top of this trend. So today was a good day overall. One of the stocks that came up on the radar is DraftKings. DraftKings, is, some of you know, is participating both in the fantasy football arena and also in the sports betting area. As a company, they've been around for a little bit of time in terms of going public. They went public via SPAC in the 2020-2019 timeframe, did a very strong move up, and then who took a big hit down through the downturn, built a very good base, and now just moving out of the base. So let's go through our 5-step process, see what we like about it. They just announced earnings. Financials wise, DraftKings on an annualized basis has gone from roughly about 300 million to about 2.2 billion. So very strong, almost about 7 times growth, 7 to 8 times growth. Strong revenue gains, 90%, 100%, and then slowed down a little bit, 72% this year. It looks like it's another 40 to 50% at least in terms of growth. About 50% to a little more than 50% gross margins, a little bit less than 50%. It's about 40% gross margins, and very strong, actually doing very, very well in terms of reducing its. No, it's not. Actually, look at this here. It's gone from 145 million pre-tax income to 1.4 billion. Man, this is losing a lot of cash. Looking at the quarterly, it's still growing very strong. Wow, this is good growth. 135% slowing down, and now again 50% last quarter, close to 60%. This is good growth. So it looks like in the 50-60% growth. Gross profit roughly in the 30% range, 30 to 35% range, and net profit in the negative 30% range. Wow, that's a lot of loss. Let's see if they have enough cash to cover their losses. Otherwise, the stock wouldn't be doing well. It's about 3 billion in total assets and about 1.3 billion in debt. It's a lot of debt, but let's keep looking at the rest of the things. And so, not a good sign that they're losing so much money, but that's something to watch out for. Keep that in mind. If the growth starts to reduce, then they have a challenge. So 60% growth 4 times is not bad in terms of price to sales, but their gross margins, as we said, about 30%, negative 35% net margin. So margins are a challenge for this company. They're losing money hand over fist. That's a significant amount of losses. And they're number 2 in the market after FanDuel, which is a private company. So, okay, yellow flags, not great, but still the stock has done exceedingly well. Over the last 1 year, it has gone up nearly about, let's see, it's gone from the $10 range to the $35. So 300%, almost 300%. That's phenomenal, huge growth. So let's look at it again. It's now in stage 1. This is a stage 1 consolidation, stage 2 markup, and then a stage 3. After the stage 3, which became a stage 1, it's again moved up back again. So this might look like it's breaking out of a channel, and that channel, I think that's one of the reasons why this stock is actually doing well. So if it goes past this range, then which it has, then it seems like this is on the upward trend. So that's a good sign for the stock. The movement back from a stage 1 to a stage 2. So this is a little bit of consolidation, and now look at this. It's moved out of the channel. That's one of the reasons why the stock has been coming up on the radar after a long time of being in a consolidation mode. Nice W pattern, U pattern. just consolidating nicely on the weekly chart, and then strong candle on the weekly chart last week. So looks like it is ready. So still on an early stage one, I would say, in terms of breakout. Oh yeah, there you go. Look at the breakout. That is why it's broken out. After coming out of a very nice break in the channel, it's growing stronger. That's one of the reasons why. Very strong earnings rate. That's probably the reason why it is breaking out. This would be one area of support for the stock overall, and it's just gone past this resistance of 34.44. And then the next resistance, let's see where that would be. It'd probably be somewhere in the 40 zone, maybe even a little bit earlier, but 40 zone looks nice. That seems like a 1, 2, 3 touches at least over there. So 34 to 40, 35 to 40 looks like a good consolidation period for this stock to move upwards. If you look at how nicely it has actually moved up the channel. This is one channel. Look at how nicely it has moved up, stayed within the channel, broke out of the channel, done a good job out of the channel, broke out, then broke down again, retested the 35 mark, moved up back again to the 32 mark, and then consolidated a little bit. Now has moved out of the 35, 34 mark to go into the 34.10. So this is an emerging breakout for the stock. So that's what I would watch for. The moving averages seem to be slightly pointing upwards, which is a good sign. RSI is definitely on the high end. So I would expect the stock to consolidate after this move up 35, maybe move up to the 37 range, consolidate a little bit, retest the 35 zone or even the 34 zone, 32 zone, and then move back up again. Very strong earnings is probably the reason why. Look at that nice power earnings gap. So after the power earnings gap up, a green candle like this, what typically happens is the stock moves up, consolidates and moves back again, or it might move downwards like this, do a bull flag and then move back again. That's what I like about the stock. Thank you for watching the channel. Please subscribe to my YouTube channel and like and subscribe. Thank you so much. Bye.